Good evening to you all, and let me begin with this week's weekly market presentation of SC Securities Private Limited. Like usual, I will start from this week's market performance and will continue with two key economic highlights and some of the insights from global commodity markets and financial markets also expected to present. Let me quickly start with the market performance for this week. Market actually began this week in a negative mode, whereas the circuit breaker was imposed as S&P SL20 index fell over by 5% at the very first trading day of the week. During Monday's trading session, due to forced selling and negative investor sentiment, which was basically caused by the detention of Russian aircraft due to a private legal issue, and that caused kind of a conflict between Russian and Sri Lankan political affairs. So, with this negative sentiment, market has experienced that kind of a major drawback, and this steep decline was especially reported in some of the index heavyweights, including Bill, LOSC, LOFC, and Expo. So during Monday's trading session, SPI declined by 251 points to close at 7,803, whereas S&P SL20 index also lost 108 points to close at 2,539.06. And the same kind of a trend could have been witnessed during Tuesday's trading session, but the circuit breaker was not took place. But anyhow, SPI declined by another 172 points to close at 7,631.13, and S&P SL20 index also declined by 84 points to close at 2,454.43. So, looking at the turnover levels for these 2 days, during the first trading day, turnover was recorded to be a value of 1.4 billion, and that was picked up during Tuesday's trading session to 1.9 billion. And foreign purchases picked up during Monday's trading session to a value of 58 million. But when we look at the Tuesday's trading session, foreign sales picked up over foreign purchases to a net value of 285 million. But this negative sentiment was somewhat turned around during the rest of the 3 days from Wednesday to Friday. So as accordingly, SPI and S&P SL both indices gained in the Wednesday's trading session. That was basically due to a market the investors speculated over a business tycoon to become a member of parliament in order to handle the economy. So this was insulated kind of a positivity to market, and resultantly ASPI gained 141 points to close at 7,772.69, and S&P SL20 index also gained 74 points to close at 2,529.09. So foreign purchases picked up during the day to report a value of 87 million over 21 million worth of foreign sales. But anyhow, the turnover was slightly lower from the previous day, which was only amounted to be 1 billion. And the same trend could have been witnessed during Thursday's trading session as well, whereas ASPI gained another 108 points to close at 7,881.13, and S&P SL20 index also gained 38 points to close at 2,567.74. But the turnover level again declined to report the least value for this week, which is worth of 917 million, and foreign purchases were slightly picked up. So during Friday's trading session, the two indices acted on a mixed note, whereas SPI gained, but S&P SL20 index declined. But anyhow, the turnover levels picked up to 1.3 billion. So does the foreign purchases reported a value of 29 million over 24 million worth of foreign sales. So let me take you through the treasury yields. Treasury yields declined for the week for another straight session. So the 3-month yield stood at 21.91%, 6-month yield at 22.89%, and 12-month yield at 23.13%. And the exchange rates also was kind of appreciated. The Sri Lankan rupee was kind of appreciated against the four major currencies of USD, GBP, UR, and JPY. But in a recent statement, central bank claimed that the existing regime, the free float regime, is still creating forex shortages to Central Bank of Sri Lanka. So, looking at the key economic highlights for this week, the United Nations organization has launched a humanitarian appeal to support Sri Lanka with an idea to raise a total value of $47.2 million to give life-saving assistance to 1.7 million fellow Sri Lankans out there who was majorly and worst affected by the prevailing economic crisis. So this particular fund is amounted to give away for 4 months from the period starting June up to September. And the United Nations organization Sri Lankan resident coordinator recently claimed that multiple factors are affecting for the Sri Lanka's food security concerns right now, especially the scarcity of essentials and also the food inflation, which is already soared up to a level of 57%, has created major impact and threat for Sri Lankans to fulfill their basic food requirements. So with that, the UN resident coordinator request from the international community to support Sri Lanka to give their hand to fellow Sri Lankans in order to find out their basic needs, to fulfill their basic needs. And apart from that, Sri Lanka reserves, foreign reserves, said to have increased after 5 months in May to a value of 1.92 billion US dollars, which was 1.81 billion by the end of the previous month, that means April. So the picked up is basically due to the deferment of payments to India under an Asian Clearing Union facility and the prevailing import restrictions and the taxes that have imposed to discourage the non-essential imports. So this 1.9 billion worth forex reserve said to have an 1.5 billion US dollars swap facility with the China's People's Bank. But anyhow, for the time being, Sri Lanka couldn't utilize this amount because in order to use the amount, there should have a sufficient foreign currency with the country to cover up at least 3 months of import. So right now we don't have that sufficient amount. So with that, this facility couldn't be utilized. So Sri Lankan government officials very recently expressed their idea regarding that, and they are in the idea of talking to Chinese officials in order to ease these conditions. And the China too said that the country is going to play a constructive role in easing Sri Lanka's debt burden within the country. So let me look at the commodity markets updates for this week. So oil prices notably jumped for this week by over 4%. That is basically due to US demand for gasoline keep rising and the expectations of China oil demand to go up with the lift of COVID-19 restrictions. But anyhow, gold prices weakened with the dollar edge of dollar, and together with that the US Treasury is bounced back to higher levels. So with that the gold prices decline. Copper prices and aluminium prices too decline for the week, but especially when it comes to copper prices that are expected to move up with declining inventories and the potential demand increase from China. And when it comes to financial markets, markets acted on a mixed note for this week, whereas some of the markets gained throughout the week, whereas some are lost. Especially the US stocks declined due to increase in treasuries over 3% and due to the fuel price hike. And European shares too extended their losses ahead of US inflation data, and that could have encouraged more speculation regarding upcoming Federal Reserve meeting. Because investors are expecting the Federal Reserve to go for a rate hike, another possible one. If you could remember, the last week we also mentioned that the markets were expecting for US job data, but however, the job data statistics were not that much lesser than the investors expected. So with that, the investors couldn't expect Federal Reserve to stop the aggressive rate hike. Where now they are thinking and expecting it to go for another rate hike by the next Federal Reserve meeting. And with all of these inflation statistics and concerns from the US and the Asian shares too followed similar kind of trend from the US markets to ended up with weekly losses. And apart from that, the despite the Federal Reserve's what they're gonna do to curb rising inflation, it has forecasted by World Bank that the countries around the world are facing recession as Ukraine war hits economies which were already shaked with the previous COVID pandemic, and the war in Ukraine and the lockdowns in China, supply chain disruptions, risk of stagflation, which caused by high inflation but low growth, and of course with some impact from the aggressive rate hike. These factors said to have destroying economies right now. So we are at a position where we do have internal concerns and the pressures are from external world as well. That's all from my end. Saliya will continue the presentation from here onwards.
Thank you, Sachini. Good evening, all. Nice to be back after a week. Let me start, as usual, with the ASI. I wonder whether you all can remember that last week we were mentioning that the index on the 6th, that was rather not the 6th, 3rd of June, which was last Friday, it closed on top of the 20-day moving average just here with a bearish close. And we were expecting the index to test the bottom level of this resistance zone between 8154 and the upper level of the support zone at 7811. And we mentioned that if 7811 is going to be broken and the price comes, the index comes below, the index will take support between 7426 and 7811. And the index continued to retrace, broke below 7811 and test the 7426 to 7811 range when it came down to test 7560.33 on the 7th of June. Thereafter, there was a reversal to the upside and the index finally closed at a high after testing a high of 7962.22 and closing at 7898.79, which is above the top level, the upper level of the daily support zone at 7811, above 7811. Our present expectation is for the index to test the 20-day moving average, which is now standing at 8141, and thereafter test the daily resistance between 8154 to 8749 once again. Before that, the index, since the market is fragile, still it is trying to form a base, a strong base. As a result of that, in the short term, we expect the ASI to trend at 8154 to a low of 7426. 8154 is the lower end of the resistance zone, and 7426 is the lower end of the support zone. So basically, around 700 points range is where the marker or the index is trying to fluctuate uh, before moving into the daily resistance, as I mentioned over here, between 8154 and 8749, and that is our short-term expectation. We are expecting the index to hover within that 700 points range between 7426 to 8154, in the process testing, or rather retesting the 20-day moving average, which is at the moment at 8141. Moving on to our chart of the week, before commenting or explaining about CIC, which is our chart of the week, I must mention that we were covering LIOC since 27th of May, exactly for 2 weeks, and since it made a return on investment of 35% plus within that period of 2 weeks, we have concluded the coverage of LIOC, and from today onwards we will be looking at CIC. As you can see, CIC was taking support between 3120 and 3410 range, you can see here, at which point it went and tested the 20-day moving average, threw back, then broke above the 20-day moving average. Within this support zone, we can see that the prices were taking support above the 20-day moving average. Thereafter, quite convincingly, we can see over here, there was an impulsive move to break above the 50-day moving average and finding resistance in this area, which is between 37.30 and 40 rupees. And now it is trying to find support, as we expect, between the low level of 37.30, low level of this range, and the upper level of this range at 34.10. So the present expectation is an accumulation to take place between 37.30 and 34.10, which is an ideal area for anybody who is interested in collecting CIC to accumulate at that level. Once again, I repeat the range 37.30 to 34.10. That is the area that you should be looking at to accumulate. Thereafter, there will be a reversal to the upside, at which point it will once again go inside the resistance zone, break it out, and test 41 rupees, which is the present high, break that out, and if that is successful, we will see the prices taking resistance in the R1 zone between 42 and 45.20. Assuming that the prices retrace to 34.10 and extend to 42 in the short term, it's a return of little over 23%. If it reaches a high of 45.20, it's a return of 32 point, almost 32.5%. In case, let's say it's not coming down to 34.10, but it's going to take support at 37.30 over here, and then extend 42%, rather 42 rupees from a low of 37.30, is a return of 12.7%. At the high of 45.20, it's a return of 21%, or little over 21%. If it reaches if the price reaches the top over here, at this point it's 24.6%, and at this point it's going to be almost 34%. So that's the level of return that you can expect if you collect in between 34.10, that is over here, in between 34.10 and 37.30. If you collect in between this area, you will see short-term returns, not annual returns, short-term returns in excess of 12% to, if you take the, once again, if we go back from here right up to here, it's a return of 33%. So that is how we make use of technical analysis to expect or rather realize returns in the short term. Thereafter, let's move on to our commodity chart, which is the US crude. And probably you are aware, since 27th we were mentioning that the prices were extending and trying to take support above $115.40, and last week it went and tested this resistance zone between $119 and $123.70. At the moment, there is a bearish formation, because you can see the one before the last candle, which is this, is a spinning top. Thereafter, it has followed with a bearish high wave candlestick. So both these formations or both these candles are implying a bearish momentum in the in this present wave. It's going to be a challenge for the bulls to keep it above $119. If by any chance there is a failure to stay above $119, once again the range between 119 and 115.40 will be tested. So moving forward, this area could be tested within the next week. Within the next week, this could be tested because of this bearish setup formation that we see here. That's our expectation on the crude, US crude. And with that, let me conclude and wish you all a very enjoyable weekend and a prosperous new week ahead. Thank you until we meet again at the end of next week. Thank you very much. Good night.
So it's the end of this week's presentation. Hope you all get a good idea and good insights regarding the facts we elaborated. And see you all in next week. Like us and subscribe to our channel for more updates. And see you all in next week. Have a good time.